What up, everybody? This your boy Leo Williams. This is my new channel, and I do have a new company called Stack and Grow Capital. A couple of years ago, somebody decided to start scamming people in my name. So I don't mind if y'all hit me up and ask for a voice verification before y'all move further. That's cool. I have a very distinctive voice. I don't mind letting y'all hear my voice to verify that it's me, you dig? But y'all know we had a great run when we was trading Forex. Nowadays, I trade options. And what I want to do is make it simple for people to understand options. That's what I'm known for. I'm known for making things simple, like on a 6th grade level, so people can get the knowledge they need, you dig? And in this video, we're going to talk about the difference between stock options for day traders and stock investing, buy and hold for long term. So let's get to it. Stock options versus stock investing, the same market but different rules. Know the difference before you put in any money. Option contracts control 100 shares. This is why options move faster. You are not buying one share. You're controlling the contract that is tied to 100 shares. Now, when it comes to shares, if you buy one share at $100 and it go from $100 to $101, you make $1. It's a dollar for dollar move when you buy shares. One of the things that make options more riskier is it have an expiration date. You need the market to move before your contract expires. Now, when you're investing in stocks, you don't have a built-in expiration date. But in options, you do. That deadline changed the whole game. You need the contract to move before it expires. But if you're buying shares of stock, you can sit in that trade for 1, 2, 3, 4, 5 years and don't worry about an expiration date. You dig? Options are riskier due to the leverage because it controls 100 shares of stocks and you have an expiration date. It make losses happen faster. You can profit, you can make a lot of money trading options, but you can lose a lot of money too, and fast. That's what makes stock options riskier. Great money, but it's risky. So to sum this all up, stock options control 100 shares in the contract. It has an expiration date, more risk. With stock investing, you own the share, no expiration date, and it moves dollar for dollar. Now let's look at a chart. If I was looking at Apple, let's go to the option chain. Apple is currently trading at $333.02. If I wanted to buy one share, I would pay $333.02 for one share. And if that market moved from $333 to $334, that's a $1 move. That's how much I'll profit, $1. But if I wanted to buy an option contract, I'll come down here and look at the strike price. These are all the strike prices. These are different contracts. This is the expiration date. And we don't pay the share price for option contracts. We pay a premium. You buy the ask to open the trade and sell the bid to close the trade. You dig? So if the market is at 333, I'm looking for something that's close to 333. There's none. But there's a 332. That's the closest contract to 333. So I will buy this contract. Now here's the thing. If I believe the market will be above 333 before my contract expires, I will buy calls. This is the call side. If I believe the market will be below 333, I believe the market will go down, I'll buy puts. This is the put side right here. You also have to pay attention to your delta. The delta is the sensitivity of the stock. How much you'll make every time the stock moves $1. Theta is time decay. How much value you will lose as long as you stay in that trade. All this makes stock options more riskier. But if you learn the game and you learn the information you need to know, this is not a problem. There's a reason why people make money with stock options. It's because they know what they're doing. Okay? Remember, an option contract contains 100 shares. So I have to multiply that $2.65 by 100. So it'll cost me $265 to buy this contract that contains 100 shares, compared to buying one share that costs $333. So yes, stock options can be cheaper, because if I wanted to buy 100 shares to compete with this contract, I would have to pay $33,000. Think about that. $33,000 compared to $265. That's why people like options. But like I said before, it do have an expiration date, so the market need to move in your favor before that contract expires. With buying shares, you don't have no expiration date. You can sit in that contract comfortably for 2 or 3 years, 4 or 5 years, however long you want. It doesn't have an expiration date. All you have to do is just pick a good company and sit on that contract. You dig? So the question is, which one is better? That depends on you, your goals and your plan. Everybody is different. It depends on your goal, your style of trading, and the knowledge that you have. But both of these options are good. They both have their pros and cons, but that depends on what is your goal and your style of trading. I hope this video was helpful. If it was, please hit that like button, smash that bell notification, and leave a comment. If there are any topics that you want me to talk about, just leave your comments in the video below. This your boy Leo. Until next time, peace.